It's May, and we have an update for you on the Austin residential real estate market. It's good news for buyers and for sellers, and we're going to explain why as we get into the video here. So I'm with my colleague, Lee Abraham. I'm David Shapiro with the Shapiro Group, a local real estate team in Austin, Texas. We can help you buy and sell. We're going to dive right in and talk about the stats. So here we have the number of active listings, and you can see it's up from last month a little bit, which is normal this time of year that the number of listings rises. It's normal seasonality as people want to sell going into the spring selling season. And then there's also more buyers out there buying. So you can see the trend is what we would expect.
Take a look at the numbers just for purposes of comparison versus last May. We were at about, one-third or something like that, the number of active listings when we started the month.
Yeah,
so I think that's interesting to note, and that's part of the good news for buyers.
Mm-hmm. Yeah, and I think some people will be concerned, like, oh my gosh, all this additional inventory, does that mean prices are going to drop? But historically, if you look back, this is not out of the norm. It was just that last year in May, it was abnormal. So now we're going back to the norm.
Right. So David, if we take those 2,145 active listings, we can break that down into a monthly housing inventory using some different metrics. And so we take a look at what were the average number of sales over the past 12 months, and you can see it was 701 sales a month. Well, that translates to just over a 3-month inventory. The 3-month average number of sales per month was 634, and then the closed sales over the last 30 days, right about the same number, 630. Both of those translate to about 3.4 months of inventory. But what we've been noting is the spike in demand over the past couple of months with the pending sales. We're looking at the pending sales over the past 30 days, a much higher rate of transactions as compared to the average over the year, past 3 months, and past 30 days. 963 pending sales, David. That translates to a 2.2 month inventory. Now, the fascinating thing is what we're starting to measure more and more is how many of those deals are falling out of escrow, how many are converting into closed sales. And we'll talk more about that later, but I think the key takeaway from this is that the demand is strong relative to the historical closed sales over the past year.
And here we can take a look at how that 30-day monthly housing inventory has changed over time. Extremely low the first half of last year. And then when interest rates went up, you can see how there's more inventory, and it's kind of leveled out, and we're in this 3 to roughly 4 months of inventory. So
right.
I think what we've seen is this is showing that the market is stabilizing in this range.
And for folks that just try to get a quick thumbnail sketch of what does this mean, typically a 6 to 6.5 month inventory is deemed a balanced market. And so if you're under 6 months, you've got what's technically described as a seller's market. And believe it or not, we're still in a seller's market based on the monthly housing inventory.
The way that we're seeing things go, it is improving for buyers, and we're going to talk about that. So here we have the number of sales. And so this is down significantly. So the number of transactions, the number of people that are actually buying and closing on homes is down 35% year over year. That's been pretty consistent in this 30% range for the number of transactions. You can see it's down 11% from last month, which, the year before it was about the same. And if you go back a couple of years, it looks like it's varied between being down and being up in April. But the trend is generally that it increases going into May as we go into the peak of the selling season.
And as a spoiler alert on this particular stat, the number of sales that close, typically there's going to be a little bit of a lag between when they actually go into the MLS. And so we're looking for this 630 when we look back 30 days from now, that there will be more closed sales just because more of the sales hit the system, and that 630 is going to jump up maybe as much as 10%, 5-10%, something like that. So we'll see these downward indicators year over year, month to month, are going to soften up as the rest of the data comes in. We're doing this fresh at the very beginning of May, and so some of the data is still trickling in.
Yeah, good point, Lee. So this might end up being 30% year over year and 5% month to month, something like that.
Right.
All right. Well, now we get to average price, and last month it was down 10% year over year, and this month it's only down 6% year over year. and we're actually up from last month. And we're seeing a stabilization here in the market. We're not seeing the big drop of 15 or 20% in prices. The big comp is next month, May. You can see
Right.
912,000. That was the peak for pricing if you look at this chart. And so I'm curious to see what our average is at the end of this month and compares to last year. But the trend is good. You know, we might be down 10% or something, but we're seeing stabilization. And when we talk
Yeah.
about what's good for buyers and sellers is a stable market, because what's hard for buyers is going and being like, well, prices dropped. Are they, if I'm going to buy this month, buy in May, and prices are going to go down further? Like, nobody likes that feeling, buying and then watching their value of their home go down. So knowing that it's stabilized and the value will stay stable, might go up a little bit, and maybe it does go down a little bit, but it's, you know, going to be marginal in the big scheme of things. Somebody that's living in a home for 2, 3, 5+ years, the marginal change from the first couple of months after they buy it is not really going to make a difference. So I think that's a good thing for buyers, even though it's still a strong seller's market. And it's good for sellers. They want to see stability as well. It brings more buyers into the market, and hopefully that'll bridge the gap with the number of transactions.
Yeah, I think one key point that we always like to reiterate on this particular slide is this reflects the market activity. You can't necessarily take these year over year, month to month percentages and apply it to your specific home. The actual price and value of a home is super hyper local. Really got to take a look at the comps, and you know what, more so than anything else, what you're competing against. What are the current active listings that a typical buyer for your home would be looking at? That's really the biggest impact on your sale price when you're a seller in the current market.
Yeah, hyperlocal wasn't a specific enough word for Lee, so he has now added super, so it's super hyperlocal, because it gets down not just to the neighborhood, but sometimes even to street by street. And
Yes.
one downside, if you reach out to us and you're wanting to know, whether it's for a couple of reasons, if you're a past client and you want to fight your property taxes, which is coming up here, just I guess a reminder, deadline for that is mid-May. So if you're going to protest your property taxes, make sure you do that in time. But if you're a past client of ours and you want our help, please reach out. We'll run some comps for you. But what we've been finding in general, whether it's working with a buyer or seller, but we're trying to analyze the market, is that when the number of transactions are down 30%, it does make it harder to find more direct comps.
Right.
Just as a side note. Days to sell. So up a ton from last year, which has been the trend so far all of this year. So we're not surprised by that. But it's actually down month to month 30%. So that's another good sign that the market is still pretty strong. And we're not seeing, you know, this, if you look back all the way to April of 2018, it's
Right.
not that far out of line with what we've seen in previous years.
Yeah, I like the trend over the past 3 months. And so this is a good indicator for the health and stability of our local market. So, David, here we have new listings, and you can see that the new listings are down year over year, month to month. Somewhat ironically, I suppose, the same exact number of new listings that came to the market in March of last year, down a little bit from last month as well as the previous year. We're looking for this number to begin to spike a bit going forward. And then the real key is, what's the absorption? What's the pending sales? Are they going to match that trend? And that's something we'll be keeping a close eye on, particularly May, June, July. Tell us quite a bit about the rest of 2023.
Expired listings, again, we started tracking it, but it really hasn't shown us much. So I think we can skip over this. If it starts to show something, we'll make sure to point it out. Our close price to list price ratio, or sale price to list price ratio, it's actually up a little bit from last month, which is interesting. Probably just normal seasonality.
It's actually been going up each month since the beginning of the year, about 1%, but oh my gosh, it doubled to 2.6% month over month compared to the previous 3 months. So just a steady indicator, the ultimate market sentiment metric, and moving in the right direction, and less than 2% off list price. Pretty strong.
Yeah, and it's good to look at the stats. I would say we have some anecdotes from other agents, from ourselves. We are seeing more multiple offer situations out there. It's not uncommon. So reaching out if you're buying or selling, so we can talk about your specific area, is really important. Our listing inventory barometer. All right, this is the most real-time stat that we have, and you can see the 100% line. So if the bar is above that, that means there's more listings than there are pending sales. And if it's below, we're selling more homes that week than we're listed. So over the past year and a half, you can see primarily the trend has been more listings, but there's definitely been some weeks where there's been more sales. And we're not that far over right now, so we are building some inventory, but it's not by a substantial margin. I don't think anything to be concerned here.
Definitely the case. The actual inventory, the number of listings is growing. The monthly housing inventories remain stable. That's the interaction between the number of listings and how many sales per month. So as we look at this and we interpret the trend, the guidance is, yes, let's expect the inventory to continue growing, but at a gradual pace, which again is healthy for the market given where we came from with less than a 1 month inventory of homes not too long ago. So
Yeah.
this is good stuff for the
Yeah,
local
I mean,
market.
as much as sellers loved putting their home on the market and getting 15 offers over the weekend, it was not healthy. It was unsustainable. And so we are moving towards a much healthier market. So that was everything within the city limits. So now we're breaking it up. We're talking about everything outside the city limits, which is a larger area in terms of the number of homes. So this includes all the suburbs, like to the north, Round Rock, Georgetown, Cedar Park, to the south, Kyle, Buda. And all of those surrounding towns in the Austin MLS, which is basically like a 5-county area. So
Right.
here you can see the monthly housing inventory. It's not that much different than what we're seeing within the city, maybe slightly higher in terms of
About
the
a half
number,
month.
but yeah, about a half month higher. So not a huge difference.
And basically what we're going to find as we go through these slides is that it's generally mirroring what's happening in town, just nuanced a little bit because of the more expansive geographical area being covered. But number of sales down year over year, month over month, which is what we've been forecasting.
The average price down quite a bit more, though, here, which is interesting to see because one thing I've been telling people for over a decade is, if you're going to buy in the best neighborhoods closer to town, because those areas not only perform better during the good times, they hold up better during the bad times. And this is the example right here where outside the city limits down 14% year over year compared to 6.6% within the city limits. So this is playing out right in front of us.
So days on market, David, this is one where the outlying areas haven't necessarily been following the same trend as in town. And to the point that you just made about the almost built-in intrinsic demand of being closer to town, this is at 69 days, which is really about the same as it's been since the beginning of the year. And so we're keeping a close eye on this particular metric because if it continues to hover at this rate or go up into the summer months, that's going to be the canary in the coal mine on what may be happening with demand, supply, and then ultimately with value. So this is a little bit concerning, and we'll keep a close eye on it. In terms of new listings, David, we're down again year over year, month to month, basically averaging out at about 3,000 if you round up. And that's kind of where we've been since last month, as well as historically over April and March of last year. Again, we'll keep a close eye on this. The good news here is that we're not looking at the G word. We're not looking at a glut of new listings being dumped on the market. If you've got a big spike in new listings along with a spiking days on market, now you've got the beginning of a pattern and a trend that is showing an oversupply, and we're not at that point. This is actually indicating more of a healthy dynamic between supply and demand, not an oversupply.
Expired listings are actually up 15% from a year ago. So I guess that's not surprising with how long things have been on the market in this area and prices coming down, people not wanting to maybe sell if they don't have to. So nothing in crisis mode outside the city limits, but just kind of tells the story of what we've been talking about.
And then our good buddy, the sale price list price ratio. What are people thinking? What are people doing based on list prices and what homes are ultimately selling for? Here again, we've kind of got the same pattern where month over month since the beginning of the year, there's been a slight marginal increase. That's continued here with just a 0.3% increase over last month, and speaks to the stability that we've been talking about, David.
Yeah. And I think, it's maybe easy for somebody to look at some of these numbers if they're an investor and think, oh, I'm going to go outside the city limits. The prices are lower, prices are down more. I just still think that you're better off investing, if you can, within the city limits. It just performs better overall. Now, if you can only afford 350K and you're not going to find something within the city limits for that, then I think it's okay. I mean, I still think these areas are going to continue to grow long term, and you're going to do great. So get in where you can, but we do feel strongly about the Austin city limits. And here, this is another one where Austin saw a 2% increase in this ratio, and it's only 0.3% outside the city limits.
Now, David, one caveat that we mention, whenever we get into this conversation is you're trading off appreciation for revenue when you've got that in town versus outside the city limit choice. So typically, if you're looking for cash flow, the property's more on the periphery due to the lower price point, the rents being relatively strong. You're going to have better cash flow opportunities, but you will typically be trading off the price appreciation, which we can leverage and all that good stuff and create wealth. So
yeah,
it's one of our favorite conversations.
If you're thinking about buying or you're thinking about selling and you're not really sure, how this all impacts you because it is so hyper local, reach out to us. You can go down in the description, book a call with us, just shoot us an email or a text, and we'll set something up to talk with you and look at your property specifically, or if you're buying, your goals. It's a strong seller's market, but you can see it's stabilizing. So that's really good for buyers as well. Thanks for joining us on today's video. If you got a lot out of it, please share it with a friend. Go ahead and subscribe to the channel so you get notified about our next video. And we look forward to talking with you in the near future.